Here are 10 ways you can save tax in your small business here in Australia. Nobody likes paying tax, but sadly it's a fact of life. What we can do is use the rules that are in place to pay as little tax as possible. Working out how to pay less tax does fall into the tax planning remit. If you're interested in what tax planning is and why you should be doing it, I did a video recently around that very topic. I will leave a link to it in the description box below. Before we go ahead and go through my 10 tips on how you can save tax in your small business here in Australia, run all of this past your accountant first before you go off and do something, just to make sure that it fits your circumstances and that you are eligible for it. Otherwise, you might find you're getting yourself into a bit more trouble. Why would you want to pay less tax? Well, let's face it, the money is far better off in your pocket than it is in the government's pocket, who, let's face it, don't do a particularly good job of spending it. So there's the first reason of why you would want to pay less tax. But just think about what you'd be able to do with the extra tax. I mean, you can actually put it back into the business to reinvest some more. You could take some more out as a salary. What's more, you're not going to have the stress of having it lurking around your shoulders. My tip number 1, make sure you are taking all the tax deductions you possibly can. It may sound like a bit of a duh moment, but poor or sloppy bookkeeping is often the reason why not all deductions are actually included in a return. What's more, if you aren't strict about using the business bank account for absolutely every purchase that you make, it doesn't even get picked up in the bookkeeping. So a couple of things here. First up, having a separate business bank account. Why? Because it makes it so much clearer and easier to track everything. Having one account to do absolutely everything means a couple of things. Firstly, you won't separate your business and your personal affairs, which can lead to things like mistakes, lack of clarity, lack of understanding, because you're never 100% sure what belongs to the business and what belongs to you personally. Now that has another result from it, really. Your accountant is going to have to sift through everything. That can lead to things like mistakes or a lack of understanding or things being missed because your accountant doesn't necessarily know everything. They're not able to identify everything clearly from a bank statement. It will also lead to a lot more queries, and it significantly increases the risk of a mistake. Here's a bonus one, just because I'm feeling generous today, is you will probably find your accounting fees will skyrocket because of the amount of extra work they are having to do to be able to sort out your business and your personal life. Secondly, sloppy bookkeeping. Now, I get it. You're a busy business owner. You don't have time to do the bookkeeping. You're too busy doing the work. So you outsource it to a professional, a bookkeeper. So you don't need to worry about it. And what's more, they're a professional, so you don't need to keep an eye on what they're doing, right? I have a couple of issues with both of these arguments. My first issue is, yes, hiring a bookkeeper is going to take work off your plate, and yes, they are a professional, so they should know what they are doing. But let's just take a step back and think about what you're actually doing when you employ a bookkeeper. You are outsourcing a part of your finance function. So every single business, no matter how big or small they are, has a finance function. And that finance function is responsible for all things like invoicing, bank reconciliations, creditors, making sure that you are getting your debtors paid on time, like anything to do with money, and that's your finance function. So what you are doing when you hire a bookkeeper is outsourcing a portion of that work to them. Now, once you start thinking about it in that sense, it's much easier to think about your bookkeeper as more of an employee than a contractor. Now, as an employee, would you let anybody do any work in your business sight unseen? Or would you always check the work that they're doing just to be sure? They are your numbers. You need to be looking at them so that you understand what's going on in your business from a financial point of view. My second issue is this business of taking work off your plate. Yes, they take work off your plate, but they shouldn't be taking it off your plate at the detriment of you never looking at it. You should be looking at your numbers maybe once a week so that you have a really clear understanding of what's going on. And that's when you want to be looking at things like your top line revenue minus all your expenses, cash at bank and any other investments, liabilities, how much GST do you owe, cash flow report. My second tip is to make sure that you are using all of the small business tax concessions. Now, this one is really more for making sure that your accountant is actually doing this for you. How do you make sure that your accountant is doing this? Maintain good communication. That means that you need to have regular catch-ups with them. You need to be talking to them about what your business is doing. You need to be explaining to them what you're wanting to do in the future. How often should you be doing this? At least quarterly. So often within our practice, we catch up with our clients when we're doing the BAS, and that's when we sit down and we go through all the numbers with them. We listen to what they're doing, and if they need to have some tweaks in how to do a transaction, that's when we're able to do it because we know about it as it's going along. So if they're going to do something, we can make sure that it's structured in such a way that they have access to all the different tax concessions that they are allowed. Now, some of you may be wondering what the elephant in the room here is what is a small business tax concession? Well, it is a concession that was introduced by the ATO in an attempt to recognise that small businesses needed a little bit of extra help in terms of both their compliance level and helping their businesses to grow. So it's a series of different concessions, and it's things like simplified depreciation rules, simplified trading stock rules, and you get to have an immediate write-off on certain assets. Number 3, use the instant asset write-off. Now, this has been around for a while. It has come in various different shapes and forms, and the government tweaks the maximum cap balance you can deduct from time to time, usually in response to the performance of the broader economy. As at the time of recording, the cap on the instant asset write-off was $20,000. So that means that you can go out today and buy an asset for $20,000 or less, and you will be able to take an immediate tax depreciation write-off. That's 100% write-off for that asset in this financial year. What kind of assets are we talking about here? Well, we're talking about things like office desks, office furniture, printers, cars, anything you use in the business to make the business do what it needs to do, you can take an immediate write-off for it up to the value of $20,000. Now, the asset needs to be installed and ready for use on or before 30 June. Number 4, review your business structure. You would have set your business structure up when you first set the business up, but they can be changed. They are not a set and forget thing. This means that if the structure you set up at the beginning isn't working for you anymore, you can change it. Now, a lot of businesses are set up as a sole trader because they're quick, cheap, and easy to set up. And as the business grows, they might become less attractive. So you might start to think about something else, and your accountant might actually advise you to go down the path of a company. If you are interested in knowing more about the different business structures available to entities in Australia, I have done a video on this. I will leave a link to it in the description box below for you to watch after this one. Number 5, pay superannuation contributions. When you go into business for yourself, you take over the responsibility of paying your own super contributions, which is something that your employer would have done for you up until now. The great news is that contributions into super are tax deductible. A couple of things to remember here, again. As at the date of recording, the maximum cap for contributions that you could put into super is $27,500, and you have to have it paid into the super fund by 30 June. Before I go into the next 5 tips on how to save tax on your small business in Australia, I just want to ask, how are you finding the video? Are you finding it valuable? If you have found one tip so far valuable, how about you hit the like button or leave me a comment so that I know that you're enjoying it and finding valuable content and I know what else to be making. If you found maybe 2 things valuable, how about you hit the subscribe button so that you actually see the next time I release a value-packed video for you to watch. If you have a question about the content, please leave a comment below and I will come back to you. Or if you have an idea for another video or something that you're interested in and want to have an answer to, please also leave a comment in the box so that I can make a video about that. Number 6, keep accurate records. I feel like I waxed lyrical a little bit about this up at number 1 when we were talking about tax deductions and sloppy bookkeeping. Now, someone once said to me, you pay peanuts, you get monkeys, and it is so true. It's true in every industry, but especially so in the accounting and bookkeeping one. Going for the cheapest option isn't always going to save you the best amount of money at the other end, because it might be that it's not done particularly well. So going for your friend who happens to know a little bit about Xero may not be the cheapest option in the long run. Number 7, keep on top of your debtors and your creditors. There's a bit of a trick to this one because it's not actually just about keeping on top of your debtors and creditors. And yes, you absolutely have to do that. You don't want them getting out of control. So in terms of paying tax, what you actually want to do is make sure that any invoices that are issued in June are not paid until July. Because as small businesses, you are taxed on income when you actually receive it. If you don't receive the income until July, you won't be taxed on it in your tax return in June. You save money because you're not recognizing income until a later period, and therefore the profit will be lower and the tax will be lower. With creditors, the reverse is true. So what you actually want to be doing is making sure that as many creditors as possible are paid before the end of 30 June. And that's because you only get to take a tax deduction for your creditors when you've actually paid the bill. So if you've paid all your creditor bills in June, then we can take a tax for them in that June. And this again reduces your profit, reduces the amount of tax that you pay. Number 8, prepay your expenses. So again, it's the same sort of principle. Prepaying your expenses actually brings the taxing point sooner. So if you just think about, say, your insurance bill that traditionally you pay on a monthly basis. When you pay it on a monthly basis, we only get to take a tax deduction for the premiums you have paid in the months that fall into the financial year. If you pay the entire premium in one hit, then we get to take a tax deduction for the whole amount of that premium in that financial year. The other big one for this is interest on loans. So if you want to, you can actually pay the interest on a loan a year in advance. And in that way, you can again take the tax deduction for the entire amount of that interest here and now. Number 9. Get professional help. Now, I say this not because I am a professional, but because as a business owner, you can't be expected to do everything. Doing everything is what leads to stress, overwork, overtiredness, overburden, and ultimately burnout. Yes, you have to pay for professionals, and some of them can come with some really eye-watering bills, but they are worth the money. Here are a few of the professionals we would always say you need to have in your business. So that is an accountant and a bookkeeper, or your accountant might be your bookkeeper. You would also want to have a financial planner, you want to have a lawyer, and you want to have an admin person or a VA. Every single successful business has this group of people instrumental in the guidance of the business. So for you to have them there at your disposal to help you in your business is going to be invaluable. Now, you don't have to have them all on the payroll at the same time, but having someone on the end of the phone that you can ring if you have a problem or a query is invaluable to helping your business grow. And the last one, number 10, invest in training and development. This is for you and all your staff as well. Aside from the tax deductibility of the cost itself, what you're actually learning will be invaluable in terms of the growth and development of your business as a whole. And I'm not necessarily talking about training to help with the technical skills you need to do your job. What I'm talking about are all the other things you need to do once you become a business owner, and that's things like marketing, personal branding, public speaking, leadership, management, all of those things that you actually need to be doing to have a successful business. So investing in yourself and in your team actually goes a really long way to help saving you time, money, and tax. And that's not just in the literal sense of the amount of money you spend, it's also in the lost time that you spend where you're either spending money on things you don't need, spending money on things you need but it turns out you don't need, spending time learning how to do things that somebody else could get done in 10 minutes flat. It's all of those little things that the training actually helps you to do. So there you go, my 10 tips on how to save tax in your small business in Australia, and here I am going to leave you a link with this video to watch next.